Alrighty. Well, good evening. How are we doing this evening? How is the sound with the 6 speakers? Good. Is there anyone out there that cannot hear? I see no hand. I think, guys, congratulations to the sound people. I think they did a good job this time.
I know we made a big promise. I know in the invitation everyone was saying, you guys promised this time, so hopefully we have a full presentation where it all works out.
And if that didn't work out, you're each going to come and get your own individualized speakers. But I'm glad the 6 worked out. Alrighty, a bunch to go over tonight, so we're going to go ahead and get started here. First off, I want to go on with on the tables. And again, I apologize for this because I waited too long to do it. But some of the tables have this nice centerpiece with the light on it and so forth. Guess where that is from? Yes, it is. and you know, and I gotta tell you, what I love about Bed Bath & Beyond is the beyond. That's the exciting part. We're not talking about the stock right now. I mean, look at some of the stuff that they have here. They got this thing for a turkey thing, to get the turkey up much easier. That's been a problem for years for me. Bed Bath & Beyond has so many great ideas. We try to get these catalogs for you. How many people do not get the catalogs from Bed Bath & Beyond? Okay. You all get them? Okay. You can actually get those, and actually, you can go online and sign up for them as well. And if you're not sure how to do that, talk to Bree. She can kind of help you with that. Stock price is going to go up if you start buying. But the reason why I'm talking about these centerpieces, and if you have the other centerpieces, you'll see my business card on there. I waited too long to order the centerpieces, but if you look on your chair, you don't need to do it now, but the back of some of the chairs, 1 chair per table, there is a bow behind the chair. If you're sitting in that chair with a bow, you get to take home a centerpiece. All right? And if you don't have the centerpiece on there, you have my card, give it to Bree, we'll get 1 sent to you. All right? So that's from Bed Bath & Beyond. All right, now we got to look at the table.
I know, I was going to say you caused a ruckus here.
And don't take the centerpieces now. Wait till the end here. Okay. She got the bow. All right, the other thing that we did too is I wear this hat that I like. I like the shape of it and so forth, but it had another company's name on it. And I didn't use that company. So what I said, you know what, let's go out and buy those hats, but let's put on them our logo with our name on the back. So if you want one, if you're going to wear one, and you take it out golfing, I want you to wear it golfing, okay? At the end, we had them out for you. We got about 40 of them. If you don't get one, let us know. We will get you one out there, because I didn't know how many to get. We got about 40 of them, but yeah, I just love it. I put it on, but my hair gets all messed up.
I will literally use it.
You will lose it. You'll use it. Okay. So we got the hats for you.
We'll give you royalties.
All right. What else we got here tonight? All righty. I'm a little bit disorganized tonight, so Chase, you got to help me out a little bit.
Yeah, I was going to say, we're talking about the Bed Bath & Beyond catalog. It's so funny. Just sitting in my office today, kind of preparing for the client event. I'm just sitting there, reading about the conference calls, getting excited. He runs into my office, didn't know he could still run, and he opens up the catalog. He's like, oh my gosh, you got to check this out. Everything is so great. I was just like, wow.
And it's
Bed Bath & Beyond.
Beyond.
The Beyond.
Beyond.
Got to look out for that Beyond.
Alrighty, let's see here. Well, I think we can go ahead and get started. Where's the clicker at? I don't know why I'm so mixed up tonight. Gosh, I just feel like I'm all...
It's that Bed Bath & Beyond guy. You're all excited.
Yeah, I get so excited about Bed Bath & Beyond, I'm going to go shopping. That's what I'm going to do. All right, okay, here, in case you're not sure, this is Will C. Asset Management, our quarterly client event for you. These things we're going to cover in the first half. Very important here, a contrarian investment rule. I thought it would be, one thing we did last time, and people really liked it, they go, you know what, I really learned some things tonight from you, Brent, some things different that we take for granted. So I want to kind of start sharing some other things with you on the educational side. This is a contrarian rule. It says, do not make an investment decision based on correlations. All correlations in the market, whether real or illusionary, will shift and soon disappear. People do that all the time. Well, it did this, it did that, so it's going to do it again. It does not. So this is one of the rules that we follow. I followed these rules for years. Never, ever look at the correlation of something. Think that you've got some special way of knowing what's going to happen next.
Yeah, it's following the trends, I guess, is another way of looking at it. And I mean, David Dreaman, who very famous investor, kind of talked about this. He said, what is this example he used? Every time you drive by a car that's red, someone sticks their arm out the window. That doesn't mean that it happens all the time. You just kind of start to picture these things in your mind. And it's the same thing. I mean, I think a prime example is Amazon. Well, Amazon, they're up here, so Alibaba, they should be up there too, right? No.
Yep.
We don't like to stick with the correlations. We stick with the numbers because that's what makes sense over the longer term.
Yeah,
we got some good stuff for you today, for sure.
Yeah, we just love reading those numbers, reading those quarterly reports. That's how you make money, by doing the hard work and being patient, which we'll talk more about that today. The other thing, too, I want to talk about is that you may not be aware, but we now have a financial planner in our office that does financial plans for people. And it's been very helpful for people. Some people say, oh, I don't need that and so forth. Brent, you're my financial planner. We're your investment advisor. Our job, my job and Chase's job, is to make your portfolio grow, make you money. We don't have time to put together a good, comprehensive financial plan. So what I'm going to do is introduce Harrison Johnson. Harrison, come on up. And he's our financial planner. He's going to share a couple ideas with you. And he is just, now some people have gone, how many people have seen him so far? Hi, and what do you think? Just keep your hands up if it was well worthwhile. There we go. I was waiting for Terry because he would. And a lot of people think, oh, I don't need that. Okay, I brought him on board because I've realized that a lot of people don't know the whole plan. So that's why Harrison's here, and I think we're going to learn something tonight from him as well. So he's going to speak about a couple different things, and let me know what you liked and how it was. So I'm going to this is you.
All right. Can everyone hear me all right? Yes. Sounds great. So I've been here for about a year now, and Brent is finally allowing me to get up here and talk. So I guess, I don't know if he didn't think I was going to make it or something, but I'm still here, and things are going well. And so I'm going to talk real quickly about the differences between what I do and what Brent and Chase actually do. Now, probably the largest difference is that I'm taller and more handsome than both of them. So anyway, is this thing turned on? All right.
This may be the last time you speak.
Yeah. All right, so going off of what Brent said, what his job to do is to make you guys money, all right? The process for that, there's a lot of research. Chase loves reading, not as much as I do, but he likes to spend a lot of time reading. They buy down here and they sell up here, and the goal is to make you guys money, all right? So an example of an investment decision might be to sell Apple at $180 a share. I'm not sure if that's the actual share price right now, but that's what the decision looks like. On the other hand, if we look at financial planning, the purpose is to get you from where you are right now to where you want to be in the most efficient way possible. Now, not looking at just your investments, but really everything that can have an impact on your financial situation, okay? So understand your situation, your needs, make recommendations on how to get there, and then repeat that process to make sure that regardless of what happens in the world around you, you get to where you want to be. The purpose, accomplish your goals, and so if we look at an example of what a recommendation might look like, maybe something called a backdoor Roth IRA conversion. How many know what that actually is? Some people do. Basically, sometimes when people earn too high of income, you get phased out of contributing to different retirement accounts. This is just a way that those types of people can contribute to that and save for retirement. So it's just one example of a recommendation. Here on the next slide, what I've done is I've met with quite a few people so far, and I've come up with some of the most common problems I've seen and the way we've handled that. And so first on the list is Social Security. Now, I've read a lot of different things. Some people say there's 400 different ways to collect Social Security. I've seen as many as 8,000 different ways. Honestly, I'm not sure exactly how many ways to collect it there are. I just know the right ways to do it. Okay, so all of these are examples that I've actually worked with people in the last year. So looking at Social Security, I had a gentleman and his wife come and talk to me, and they said, we're looking to retire in a couple years. Here's our statements. Here's how we're thinking on going about it. What do you think? So I went back, did my thing, did some analyzing, and I was able to find a strategy that gave them an additional $160,000 over their lifetime. Now, that one decision for 160 grand, that's a pretty large impact. And when a lot of people think about Social Security, they think, all right, there's a file and suspend strategy, there's a restricted application strategy. This didn't include any of that. So there's really a lot of different things that you can do, and it's worth taking the time to make sure you handle it correctly, because it's only for life, right, as soon as you collect it. Next situation, a lot of people are concerned with the rising costs of health and elder care. Okay, now, it's a touchy subject because we can't define exactly how much it's going to cost in the future, if anything. So just some statistics. Right now, a husband and wife age 65 retiring today are going to need $275,000 of money to cover medical expenses. That's not what's covered by Medicare. That's not what's covered by anything else that is completely out of pocket. 275 grand just for medical expenses. That's not including dental or elder care also. So on the other hand, elder care, long-term care, if we look at that, I know these are not the greatest facts, kind of depressing, but 1 in 3 seniors alive today in America will die of Alzheimer's disease. So if you have a husband and a wife, there's 2 right there. So what that means is it's worth taking the time to make sure you're handling those decisions appropriately. That does not mean everyone needs to go buy long-term care insurance. It just means we have to have a plan for those expenses if they do actually arise. So, one example of a way I was able to find a way for people to do this, and this happens pretty commonly. There's something called an HSA, and what that stands for is a health savings account. What that is an account that you can put deductible money in, like a traditional IRA. Once it's in there, that can grow tax deferred, and then if you withdraw it for medical expenses, that growth and those withdrawals are tax free. So if you're concerned with taxes, it hits all the 3 tax areas. Now, in 2017, a family can put $7,750 in there. Next year, it's going up a little bit for the inflation adjustment. But by using this strategy, we're keeping people from having to pay thousands of dollars for a long-term care policy that they might never actually get to use. So that's another example of something from accomplishing a goal without spending a lot of money doing it. Another thing, if we look at taxes, now taxes itself is a really big animal. There's a lot that goes into it, and there's really a lot I could talk about, but here's just one example of someone I helped out. Now, this person, they had a bunch of money in a 401k and a traditional IRA. Now that's great, but as soon as they start withdrawing that, it's going to be fully taxable at ordinary income levels. Now, and then when they get to age 70, there's RMDs. So what we were able to do is we discovered this year was actually a really low income earning year. And so we were able to do a Roth conversion, convert money from a traditional to a Roth. So when they do need that money, it'll be fully tax-free. And since we can take advantage of a standard deduction and purchasable exemption, moving it over was actually no tax liability. So they got to deduct it on the front end. We moved it over without paying taxes, and then you get it free on the back end. Usually, whenever you convert that, it's always taxable, but by understanding your whole situation, we're able to find out different ways of handling that. Next thing, life insurance. Now, no one likes talking about life insurance unless you're really good at selling it. Myself, Brent, and Chase are not good at that. We don't like doing that, but it is part of people's situations. So I was talking with some clients recently, and at one time they needed a lot of coverage, but they don't need that much coverage anymore. So they didn't actually know how much money they were actually spending on it. Turns out they were spending close to $10,000 a year just for life insurance. Now, we were able to get rid of some of those policies, keep the coverage that they actually need, but drop some of them that they no longer needed. And the end result of that, they're saving about $7,500 a year. And also, some of those life insurance policies were universal life that had cash value in it. So by surrendering those, you get that $30,000 cash value completely tax-free. Now, if they had waited, number one, they would still be paying the full $10,000 a year, but also the way universal life policies work is you pay money into them, the cash value grows, and then it starts to go down as you get older. If they would have waited, that cash value would have slowly diminished down to nothing until the policy ultimately lapsed. By taking advantage of it early, we're able to save them quite a bit of money. So there's another example of something that has to do with your situation that's not just related to the invested portion. Lastly, I had a husband and a wife come to me recently. They lived in Poway. They had no investable assets, or very little, so there's not a lot that Brent and Chase could do for them, but they still needed help. They had some rental properties that were bringing in income for them, and they wanted to live in Coronado. They didn't think it was possible based on the wealth that they had, but looking at their cash flow situation, how much taxes they're paying, and taking advantage of some transfers of property tax, we're able to get them into Coronado. So right now they're actually building their dream house that they didn't actually think was possible. So that's the type of stuff that I actually do, and those are some of the problems that I've helped people with. Lastly, this is my philosophy, my look on things. Lasting wealth is not about income or bank accounts. It's about making the right decisions. And there's a lot more that goes into people's lives than just a rate of return. So making sure that all those decisions are handled appropriately is the best way to make sure that whatever's important to you actually comes true. So now I'm going to hand it over to Brent again.
Alrighty, and as you can see now, we are the only investment advisory firm that I know in the city, if not the county, the country, the state, whatever, that actually you can use a financial planner, pay him a fee, and not have to invest your assets with us. Now, we hope you obviously do, but I wanted to keep the financial planning separate from the investment side. So again, it is something that we offer to all our clients. You get a free consultation if you want to come in and talk, sit down and talk with them for an hour, whatever it is. He'll show you the presentation. If you like it, great. And actually, Terry, I think, was one that he said, oh, I don't think I need it. And then you came in, what did you say?
Well, there's two things. What he said was, most people are financial advisors when he funded the commissions. There's no commissions with him. And what he does is he recommends whatever it is, but he also does a research. He says, well, I think you need this, I think you need that. No, he'll do it for you. Research the specific companies that would fund whatever it is, and he's not tied into it. That's something that is fabulous. And I've never seen a financial planner do that.
Yes.
Because they want to fund it through stocks or insurance or whatever. Right. He doesn't have the actual right to do it there. I was amazed. That's what I made.
That's what I was kind of looking for. I asked Terry a quick question. He gives me the whole thing, but I appreciate it. But again, during the break or after you can talk to Terry, talk to Harrison, because again, it's something that can benefit a lot of people, and that's why we do it, to help you out. That's why I brought him on. And is he really better looking than me? I don't know what you're going to say.
I was going to say, what about me?
Well, you defend for yourself.
I was going to say, though, it's kind of interesting, like, looking at the people that come in. I think people like us, but they seem to like Harrison more than they like us sometimes, because they really get to kind of sit down with him, and he gets to talk to him a little bit more, and get to know him pretty well. So he does a great job, and love having him on board.
And actually, the reason being is that because Chase and I were focused on making you money, Harrison actually, people tell him stuff that is just unbelievable, because he's kind of like your doctor, your psychiatrist, whatever, because he finds everything about you. So it's actually a good conversation he has with you, and our job is to find about your investment part, make you money. So he is something different. So I do, again, encourage you, call him, talk to him today. Come in, again, there's no charge for the consultation to see if it's something that will help you out, and it is completely unbiased, his financial plan.
I was going to say he's a financial psychiatrist. I think
there we
a
go.
Good word for it.
All right, let's talk about the economy a little bit here. Let's start off with the S&P 500, the valuation ratios. Now, people are starting to get nervous. Oh my gosh, Brent, the market's kind of high here. Well, you can see right here, it is about 17.7 is the current PE. Not as high as it was back in 2000, but there is concerns here that you should be worried about a little bit on the valuations of the market. However, let's talk about the next page. Then we get into valuations on our buys versus the S&P 500, and that's a little bit different here. Let's talk about the PE for the trailing 12 months, and these are GAAP. GAAP stands for Generally Accepted Accounting Principles. Everything we do is based on accounting. There's no hype, there's no performance, anything crazy like that. See, the S&P 500 is 23.6. Why the difference? Because this is the GAAP numbers, not the pro forma numbers. S&P 500 historical, 19.1. Look at the WAM buys. It's the average of all our buys. 12.1. That's why we're not worried about the market. We keep telling people we don't invest in the market. It's not a stock market, it's a market of stocks. You can go in there and buy companies at 12.1, about half the industry at 23.6. Price to sales, 2.2. Historical average, 1.5. Yes, higher. Wilson Asset Management, 1.1. We're finding those good values for you in the market.
I was going to say, it's so important. I mean, we call it a market of stocks for a reason. Everyone that kind of comes to me and they're kind of new to the process, they say, oh my gosh, the stock market's so expensive. I say, whoa, wait a minute. Do you guys know that Bed Bath & Beyond, they're a great company, right?
Right, Kathy?
But the point is, we're not buying the market. It's like you go in the grocery store, you go shopping at Bed Bath & Beyond or whatever store it is, and you see something on sale, well, you get excited about it because it's at a discount. And that's exactly what we're doing in the market of stocks, is we're looking for those discounts. Kind of continuing the conversation, price to book value is a great measure. It measures the assets minus the liabilities or the equity of the firm, and how much are you paying for that equity. You can see the S&P 500 right now is at 3.3, above its historical average of 2.5. Don't worry, we're at 2.0, so we're getting a great deal for that book value. Price to cash flow, you can see it's 14 currently for the S&P 500, 10.5 historically, so well above that level. But again, our buys 7.9. And then this is an important one because you want to make sure we're not overpaying for that company moving forward. It's the PE looking out about a year and a half, 2 years from now. Again, very important on a GAAP basis. We don't like the smoke and mirrors. We like to stick to those generally accepted accounting principles. See S&P 500 about 18, and you see the average, long-term average, 16.5. Does that number ring a bell to anyone? That's our target multiple. We sell out when it hits 16.5. You can see we're buying at about 11 times future earnings right now.
I just realized I've been demoted from president of the company to pointer. All right.
And, you know, sometimes people say, oh, valuations, they don't matter, who cares? Well, let's take a look at history. What this shows us is the forward PE. Again, we don't want to overpay for those earnings, and the subsequent one-year return, and over here is the 5-year return. You can see as we move left on the chart, it's a lower future PE, and the returns are higher. Does anyone want a return over here, or they want the returns over here? You want the higher returns, right? That's why we stick to buying those good value companies, because we're looking out where our return is going to be 5 years from now.
I keep having trouble.
Next slide, please.
I get too much going on. Don't get fired as a clicker. All right. We'll talk about the growth, the real GDP. Again, we're doing very well. The GDP is beginning to pick up and grow. You can see right now it's about housing about 3.8%, investment, ex-housing 12.7%, government 17.3%. This was much higher years ago, but now because the economy is growing, the government's still spending to some degree, but it's come down as percent. Consumption 69.1%. Exports, when we export goods, that's a negative against our GDP. It's not a good thing. And we can see the real GDP year over year is 2.2%, quarter over quarter 3.1%. It is increasing. I talk to business owners now. I was talking to somebody else when they come in. He has a carpet flooring business, and he goes, "We're so busy." I mean, that's what I'm hearing from all my owners of businesses. They're just so busy, have so much business. It's not just here in San Diego. It is actually nationwide. So the economy is doing very well. I think it will continue to do well going forward.
Next up is the consumer balance sheet, and again, we read this for companies, but it happens on a personal level as well. And I remember when I first came on a couple of years ago now, we were so close to 100 trillion in assets. Well, we've now exceeded that. You can see the consumer balance sheet now has $111.4 trillion in assets on it. You can see back in 2007, everything was great, right? It was so great back then. We just had assets of 82.2 trillion, so we're far past that now, and the consumer's doing very, very well. And compare that to total liabilities of 15.2 trillion. That's a very strong net worth, a very strong equity for the consumer. And over here you can see the household net worth over time, and the right side of the chart's higher than the left side, so that's a positive.
All right, next we have unemployment, wages, the employment numbers and so forth. Again, the economy is doing very well. This shows in September, it was 4.2. That's about where we stand right now. I think it fell to 4.1 recently. Employment is doing very well. I keep talking about what's going to be happening because unemployment is getting lower and lower to get good people, because we talked about businesses having plenty of jobs. Well, the problem they're having now is finding employees to actually fulfill those jobs and do those jobs. The only way to get employees is start taking people from other jobs saying, hey, you're making $60,000 now, come work for me, I'll pay you $70,000. So what that's going to do is cause wage inflation, which put more money into people's pockets, which means they'll be spending more, which will push prices up. So we will be having inflation down the road, which the long story to that is that that should also start increasing interest rates. So that's where you're concerned, again, about bonds. And things don't happen, and because we say it now, it doesn't happen tomorrow. We're talking about the long-term objective. Real quick, on GE, I can't say this because SEC, but we recommended people sell GE back when it was at 28, about late 2015. About 3 or 4 people asked me about GE. We still would not buy GE now around 17 or 18. But my point being, it took about 2 years for things to fall apart. Things in investment world, in the economic world, do not happen in weeks or months. They do sometimes happen in years. I'd rather leave the party early than stay too long.
So another favorite subject of all you guys is the oil markets, of course. You can see the production over here, and production has been increasing over the past several years, but you can see consumption is the other side of the equation, and that's been increasing. One thing people forget about on the consumption terms is, has anybody ever heard of that small little country, India? Big country, they're starting to use a lot more oil. You can see China here, they've had growth in their oil consumption about 14.3%. So these these emerging markets that are quite large are starting to use more and more oil, and that'll take up some of that production that is coming on board. Over here you can also see the rig count. You can see that's coming up a little bit, but not quite near the peak from a few years ago, and you see the inventories are starting to drop a little bit as well. And then you can see the historical price of oil. Again, we don't think oil is going to go back up to that July 2008 high of $135 for oil anytime soon. We think it's going to kind of stabilize in about $60 to $70 a barrel. Again, not today or tomorrow, but for the next several years.
Next we have the fund flows, and this just amazes me still because people, I don't know what they're thinking about, but anyways, have U.S. equities, assets under management, $7.4 billion. Look at the taxable bonds, tax-free bonds, multiple assets, but look at the growth here. They're still putting money into taxable bonds. They're doing okay. I think the returns now, because now rates have stopped declining, the people getting on bonds now are about 2 to maybe 4% on good quality bonds. That is going to start turning negative pretty soon. Here's another example here. Bonds, cumulative $1.9 billion. Actually, that's $1.9 trillion. Stocks about $1.3 trillion. So again, bonds keep rising. People keep putting money into that. It is going to be a disaster when rates start increasing, which will happen. Rates are not going to stay low forever. I can't tell you what day it's going to happen, but it will happen again. As the economy grows, to cool inflation, you have to raise interest rates.
Now, this is such an important slide. I mean, when it comes to investing...
Pay attention to this one. Next 2 slides.
I know, when it comes to Wilsey Asset Management, again, we're not all that hype. We're not, oh, the trend is this, so let's sell out and, get in the ups and downs and the emotional side of it. No, we follow a very simple strategy, but it's very disciplined. It comes down to the numbers. We'll only sell a company for 2 reasons. Number 1, has the stock reached its target sell price? Every week we do those numbers, and if it hits that target sell price, we sell and get out. But if not, we're not going to sell and get out. If the equity declines in value, why did we buy it initially? Was it a good business? A stock price can go down, but that doesn't mean it's a bad business. If the business is still doing the right things, we'll continue to hold it. And what has changed, if anything? Again, the Bed Bath & Beyonds of the world, if they're still doing the right business structure, the stock price is down, but we don't care because fundamentally it's still a good business. And finally, does the change affect our reason for investing in the company? So that's the thing about the stock market as well. The price of that thing, your company is for sale every single day. You can go in and sell that company at any time you want. If the business does change, is a business that I want to hold. So we evaluate that every single week, every single day. And our businesses, they are always up for sale, but we're not going to sell it at a bad price.
And let me ask you, how many people, when I talk about Bed Bath & Beyond and Parker Drilling, this is what you want to do? Well, then the next slide, we won't talk about who the next slide looks like. Kind of scary, huh? That's the way you feel when I keep talking about Bed Bath & Beyond and Parker Drilling. But we want to talk about an example of what Chase has talked about here. Stock is down 20 to 50%. Oh my gosh, Brent, what are you doing? Why don't you sell that stock? Well, why did we buy the company in the first place? We always look at that every single week. Why did we buy this company in the first place? Is it still the same reason? If so, we hang on to it. Stock declined 60% and now trades at 5 times earnings. This is what you don't see on Parker Drilling, Bed Bath & Beyond. It actually is a better buy than it was when we first started buying it, because it now trades at a much lower multiple on price to book, price to sales, price to cash flow, price to earnings, whatever it may be. It's a better value at this point in time. Initial buying the stock traded at 10 times. In reality, it's half the price. Even though stock dropped, that doesn't mean you sell it, because of the fact that you've got a better deal on that. Also look at what we are paying for the sales, book value, and cash flow. Sometimes things are going to change on that to where the earnings do go away for whatever reason, but it's still a good business to invest into. And again, we're looking at things to where we're not, and I would love it when we have companies that they go up in 3 months, 6 months, yes, that is great and so forth. But you've got to remember, we're buying businesses for 3, 4, 5 years. Sometimes it might take 2 or 3 years for that to happen. And I've got to say, I always laugh a little bit, because people, they'll point out Parker Drilling, Bed Bath & Beyond, say, oh my gosh, it was terrible, and not look at how well the other 13 companies are doing and how well your overall portfolio is doing. Those losers today, because we're watching them, are the winners for tomorrow. And I can't tell you the number of times that we've had that happen, and it goes down, people hate it, and then 3 years later it's the winner, and they never say, oh, I'm so glad we held on to that. Then they pick on the new company that's down 30, 40, 50%. So I can never win.
I was going to say, I'm going to go on record and say, I think you guys are going to be happy we didn't sell those companies 3 to 5 years from now.
Yeah.
So don't be mad at us tomorrow, next week, next quarter. In 3 to 5 years, if it's still the same thing, then you can be getting a little upset with us.
And I want to point out this here too. Price to tangible book value is used by many successful value investors. And people are saying, oh my gosh, I'm Parker Drilling, Precision Drilling. They're just playing the pray and hope game. They're just guessing now and so forth. We are not. We're looking at the balance sheet saying, is this worth something? And they are worth a lot. They're worth about 50 cents on the dollar. That will come back. And there are many successful investors using value that do extremely well over the long term, but it does take 3, 4, 5 years, not 3, 4, 5 months, or even 12 or 24 months. So we're being very patient. And once that changes, if things don't look good, we will sell those companies. But right now, I would tell you, Parker Drilling trades about 50 cents on the dollar for the tangible assets. And I don't think we're talking about that today, are we?
We're not. So I was going to say too, I mean, if you guys want to do a little bedtime reading tonight, just read the conference call for Parker Drilling this morning, actually. I can tell you, they got some very strong things going on with the business. I mean, they talk about their rental tools, which is a higher margin product. And as the rig count's growing, as the production continues to grow, people need to use rental tools more often. And again, that's a higher margin product. So as their sales increase, you'll see those margins creep up, and you'll see Bed Bath & Beyond stuck on that as well. You'll see Parker Drilling start to make money again down the road.
And again, how many people right now feel like this because we keep talking about Parker Drilling?
Well, and
Please.
like the Hulk.
What's
I
that?
feel like sometimes when people call me, they're like,
Well, that-
oh, Parker Drilling.
Yeah, get up Parker Drilling. Terrible. Well, let's just show you another thing of why we look at the valuation so much.
We talked again about that price to book value. It's a very well-known strategy by a lot of value investors. And you see a low price to book value. And again, this is from David Dreaman, who's kind of a famous value investor. Over 5 years, again, not two days, 5 days, 5 years, a low price to book value had a return of about $21,849 compared to the market at $19,122. I'm not going to go through each one because you can all read, but let's go to 20 years. $223,620 for a low price to book value company versus $128,321 for the market. Who's happy with this number versus that number? Right? We all want to make more money than less
That's
money.
right.
So that's why, again, we're sticking with Parker Drilling because of that price to book value. It's phenomenal. I mean, you're not going to get a sale like that anywhere.
When is it? Wednesday, Chase and I had a lunch with a very successful person here in San Diego. He was telling about this gentleman who actually, he made about $10 million. He was buying properties and so forth, did pretty well. And then he actually went in and he bought from military bases. It was like the nuclear...
Yeah, I forget what it was exactly,
Yeah.
but
it was like nobody wanted it. It was going for dirt cheap and so forth, and it was terrible. And for years, he was like, oh my gosh, you're an idiot for doing that. He did that when he was 50. By the time he was 65, all of a sudden the government started saying, oh, let's buy this stuff. And he made tons and tons of money. Why did he do it? By buying something low that nobody wanted. and seeing value down the road. But again, the point being, it took 15 years. We're not telling you Parker's going to take 15 years. We're saying 3 to 5 years. And again, that's what we do is we buy things that people don't want that we see down the road look very good. So
I also had a great analogy because you talked about a big oak tree. You know, you're not going to go out there and swing
Yes.
once at the oak tree and it's going to fall. You know, again, same thing. We're not going to go out there one day and Parker Drilling is going to go from $1 back up to $2. We're looking at chopping into that oak tree every single day. And, you know, 3 to 5 years from now, Parker Drilling back at 2. Is anyone happy with the 100% return there? It's pretty good, right? Yes, yes, but again, it's kind of different. You said we paid 10 for it.
you paid 10 for it.
I don't think we ever paid 10, but we paid a little bit more. Yes. But again, we evaluate that business every single week. So I mean, we can't sell out of it. We wouldn't sell out of it at $1 because of that low price to book. Again, that business changed, the fundamentals changed, but the change is still something we would hold.
And also, too, we talked to the CEO about 3 or 4 weeks ago. We're going to go out to, I think, Louisiana, I think, in the springtime. Let me ask you this, too. He offered, because we do hold a big portion of it, he offered to come in the springtime or the summer to come out and actually talk to you. I said, let me talk to my clients first to make sure they won't throw anything at you, okay? So would it be beneficial to have the CEO of the company that you own a big part of talk to you? Would that be a benefit for you? Yeah. Okay, yeah. Yes. It'd be the CEO. It'd actually come out. Because we do talk to them on a regular basis and so forth. And so we're looking forward to that. So, yes.
Isn't Parker Drilling considered a penny stock now?
I'm glad you asked that question. Isn't Parker Drilling considered a penny stock? No, it is not. Because there's different parameters of what calls a penny stock. Just because it is down in a dollar range does not make it a penny stock. A penny stock would be one that they do not do filings with the SEC. Parker Drilling still does, and there's a list about 4 or 5. Can you remember the other ones? I did it. I actually sent it to someone. I think I sent it to Kevin McCormick. Kevin, is he here? Yes, he is. Okay, where's he at? I hear the
There's that voice.
Remember I sent it to you? You remember there was like 4 or 5 that I sent to you? Yeah. So, yeah. One is that they still do the filings.
I mean, that's
a
really
certain
the big
market
one.
cap. The market cap. Oh, they're listed on a major exchange. They're listed on the NASDAQ. If you're a penny stock, you go to the over-the-counter bulletin board stocks. So there's about 4 or 5 reasons why Parker Drilling is not a penny stock. I'm so glad you asked that question because it is not a penny stock. So,
Yeah.
All right. It is now 6:41, so I'm a little bit behind here. We're going to go ahead and do the table release. Now, the first one we're going to release is if you're sitting at the table. Are we ready to go on the food? Food ready? Okay.
I was gonna say, I don't see
Is if
Charlie.
you're at the table Parker Drilling, you get to go eat. Nah, I'm just kidding. There's no Parker Drilling out there. Actually, we... It's not here? Oh. Well, actually, we had a client today that had a birthday. Is Charlie Collins here? Charlie Collins? He didn't make it tonight. Oh, shoot. What's that? Well, actually, we're going to release that table first, but since he's not here, we're going to go back to the original plan. What we're going to do is release the tables by price to tangible book value. Okay, and that's why if Parker Drilling was a company, they would be first. Now, guess what company's going to go first? No, not Apple. No, not Valero. Your favorite company, Bed Bath & Beyond. Yes, you're the winner. So if you're at Bed Bath & Beyond table, please go up and get your food. Alrighty. I think everybody's sitting back down again. I saw when I went on the tables, I saw some people with the hats there. I think they're on the table out in front there. So again, you want to pick up the hats, so go ahead. I think we have enough. If you go out there, they're not there, please let Brianna know. We'll make sure we order more for you. Also, too, I just love going around talking to people about the comments that I get about Bed Bath & Beyond, about Parker Drilling. It's so funny. Some people say, Brent, please buy more Parker Drilling. Other people say, Brent, don't you buy Parker Drilling. I mean, I get the both ends of the spectrum there, but I just love having the conversations with you as well. So let's move on to the second part where we talk about the companies and so forth. Before we do that, we do want to talk about some exciting news on some other companies that we're not covering tonight. The first one that we have in the portfolio that we're not discussing tonight, but is Gilead. And Gilead purchased Kite, which puts the company into oncology. with a groundbreaking drug. And so this is something new that Gilead is doing.
Yeah, it's a big thing. I mean,
Did you turn your microphone on?
is it on?
Are we on?
Good to go?
There you go.
I was going to say it's a really important thing because they actually just hired a guy from Novartis who's very engulfed in oncology. So this new acquisition will really kind of be his platform to take over. And the the company actually closed in 5 weeks. Oftentimes, I mean, we've seen what's happening with Time Warner and AT&T. It takes a long time typically for deals to close. This one got up and running very quick. 15 days after the deal closed, they got FDA approval for this new drug. And again, it's for oncology, cancer. I believe it's lymphoma is what it cures. So, I mean, people talk about Gilead being a one-trick pony because of their hepatitis C drug. Not true. They generated so much cash from that hepatitis C, they can now go purchase drug companies like this to really sustain the future.
So again, another exciting business is Gilead doing some great things for the long term. When I was out there, somebody said, well, you're going to do anything with Amazon. We would never buy Amazon at these levels. It's too pricey. However, we bought a company named Kohl's, which you may know Kohl's. Kohl's actually came up with a deal for Amazon to be in Kohl's store to do returns, I think sell their Echo. Yeah, sell their Echo. So that was a big deal.
It's a big thing as well. I mean, we obviously still like the company Amazon, but the stock price, we would never buy the stock price. But with Kohl's, the importance is you can go and return anything that you buy on Amazon at Kohl's now in select stores. It's not in all markets yet. And why that's important is it increases the foot traffic at Kohl's. You go return something from Amazon, you're walking out of the store and you see a new shirt. It's like, ooh, that's pretty cool. Or a new piece of jewelry. Oh, that looks nice. So it kind of increases that foot traffic. And I forget the number. I had a number of the percent amount of people that go into a store to return something that walk back out with more than they came in for.
40%?
It was close to 50, yeah. It was pretty substantial.
Yeah, the whole thing is get those people in the stores that are non-Kohl people, and they'll actually buy something else. So we were happy to see that deal. And again, we don't hate Amazon as a company. We just think it's way, way too pricey, and people are going to lose a lot of money down the road on it. And lastly, a new company that we added recently was a Goodyear Tire. And Goodyear Tire is testing a smart tire that's much like a Fitbit, relays condition information based on cloud computing analytics. And this is very exciting. I mean, we love Goodyear, and they're really doing some exciting things in technology.
Oh, absolutely. And I mean, we talk about the cloud, and it seems like every company now is really becoming a cloud company, a technology company. I mean, Goodyear Tire, a rubber and tire company, now has cloud technology that they're working with as well. And what it does is they can really track, the air pressure, how often you need to replace it. You get a notification saying, oh, you should probably replace your tires. And it's going to be very prevalent when we do see kind of autonomous vehicles come on board. That's what this tire is going to be for. So, you're not going to be as engulfed in having to worry about your vehicle. Goodyear Tires really kind of preparing for the future there.
So some exciting things that we thought kind of share with you about your businesses that you hold in your portfolios. Let's go on to the more detail on some other portfolios here. First off, we'll talk about my portfolio, what I have in my portfolio. Here's my holdings. Again, no one else that we ever come across, no advisor has ever that we've seen actually shows their clients what their portfolio looks like. Well, here's my portfolio. You can see the two that we talk about is Bed Bath & Beyond and Parker Drilling. I will tell you, before the end of the year, I do plan on adding to both those positions because I have about 7.3% in cash. So we will be looking at adding to both Parker Drilling and Bed Bath & Beyond. That's not just for you, it's for me as well. But we have other ones in there as well that we have. You'll see that many companies we have. Nucor, we just bought that one. I don't have Goodyear Tire, unfortunately, because I can't do them all. But again, my portfolio is very similar to all your portfolios as well. So it's not like we buy something for you and we go out and buy something else. No, we generally buy it for ourselves and for you at the same time because we believe in those companies.
Next up is my portfolio, and again, same thing. You can see a lot of the same companies that you have, I have in my portfolio. I say at every client event, but you'll see Bank of America and Best Buy in there as well. For those of you that are new clients, the reason that mine's a little different is I started investing my own money when I was in high school. So that was 2011, and that's when I bought Best Buy, Bank of America, because I wanted to learn the philosophy without copying everything in the portfolio and actually get some experience there. And again, I didn't sell out of them because they're still really good companies. But other than that, you can see again, Bed Bath & Beyond makes up about 5.2% of my portfolio, and Parker Drilling down here makes up 6.9% of my portfolio. I have added recently to both Parker and Bed Bath.
I was going to say, it looks like you've done that because I see you got 0.2% in cash. And again, Parker Drilling is higher, and so is Bed Bath & Beyond. So you're ahead of me in doing that. Maybe you need to work a little bit harder, put more money in your portfolio.
I do every month. I add to it.
What? You want to raise? What? All righty. Let's talk about Bed Bath & Beyond. And don't all cheer at once. All right, Bed Bath & Beyond. It's number 4 on our buy list. The numbers don't look very good. We own about 133,000 shares. The market value is about $2.6 million. The stock price year to date is down 50%, okay? We don't care about that. That's an emotional thing. We still like the company, as we talked about earlier. Why? Go back to the end of the presentation before, why we still like it. Current stock price, 1972. It was founded in 1971. We have talked to this company as well, and they're saying, you know what, we don't care about the stock price. We care about our customers. We care about the business. We don't care what the short-term movements of that stock price is. We know if we run the business well, the stock price will reflect itself down the road. What I like about Bed Bath & Beyond is the comp sales from digital channels grew more than 20% for the past 13 quarters. They're not just standing around saying, oh my gosh, no one's coming to the stores. They're working on the digital channels, and they've been up 20% for the past 13 quarters. What is that, 4 years, I believe? Almost 4 years, yes. Furniture and decor represents a large growth opportunity. They're investing in growth businesses like furniture and decor. Also, too, they differentiated products represent about half of the total sales. That is what? That is called the Beyond, okay? That's the Beyond, the differentiated products that they have that you can't get anyplace else. Remaining, and I love this one here, remaining shares repurchase program, $1.6 billion, market cap $2.9 billion. What this means, they can spend over the next few years $1.6 billion to buy back the stock. If the market cap's only $2.9 billion, they're buying back more than half of that stock. That should at least alone double the stock price, okay? Management believes in this company quite a bit.
I was going to ask before I go on to the next 2 bullet points, is anyone actually concerned about Bed Bath & Beyond going bankrupt?
Don't be afraid to raise your hand.
Good, good. Well, we're all concerned about it. What was that?
She goes shopping there all the time.
Exactly. So it's a great business. That's why we hold it. But the reason I ask is anyone concerned about the company going bankrupt? We talk about a fundamentally strong business. They expect cash flow from operations to fund the operations of the business, capital expenditures, the dividend, and share repurchases. I mean, that's phenomenal. They're not cutting into their cash balance at all, and they're doing everything with the business. I mean, you run into problematic things when you have no cash flow. Bed Bath & Beyond has very strong cash flow, and that's why they can pay a dividend. They pay close to a 3% dividend now. I think it's over 3% actually if you bought it a couple days ago, but it's a phenomenal company. And also talking about that balance sheet, the concern of bankruptcy, current ratio 1.77. That means they have close to 2 times the amount of liquid assets or current assets over the current liabilities, so they can pay those current bills. And debt to equity is 54.8%. They don't have too much leverage on the balance sheet where, oh my gosh, their creditors are going to force them into bankruptcy. It's a very, very strong business. And talking about our target sale price, if we look out to February 2019, estimated earnings per share on a GAAP basis of $2.97 gives a target sale price of $49.01. So well above that current price of about $20 per share. And then looking over here, concerns about Bed Bath & Beyond. I mean, we love our clients here. I don't like when you guys are upset. We want to make you guys happy, so the extreme dislike from the clients is the only thing that really concerns us about Bed Bath & Beyond.
Next company?
Next company we're looking at is JetBlue. Just adding it into the portfolio this year. I mean, we're very excited about this. I just saw some numbers about Thanksgiving travel is actually going to be a record. And that is for people flying. And when the economy improves, people feel better. People are traveling more for business, for pleasure. So we're very excited about JetBlue. See his buy list right now is number 6. Own about $6.3 million worth of in the portfolio. You can see it's down about 1% for the year. Current stock price about $19 per share. And its headquarters is in Long Island City, New York.
And I think actually today, I think the stock was around 2050, I believe, so it moved up quite a bit
it was up
a
quite
couple
a bit.
days ago. Also, too, what we like about JetBlue is the Mint, which is kind of like their first-class business, saw revenue average sales per mile. Is that correct?
Revenue per available seat miles.
Available seat miles. Darn it, I got it wrong. Okay. Gains of 12%. New service from New York to San Diego is off to an exceptional start. And what actually hurt JetBlue was the hurricanes. They were doing extremely well. Those hurricanes came in. They couldn't fly into Florida and a lot of the East Coast
You're
ones
stealing
there.
my bullet point.
What's that?
You're stealing my bullet point.
Oops, sorry. They are focused on driving consumers directly to JetBlue. What they're trying to do is save people money as opposed to going to other places. Come back to JetBlue directly and make your tickets there. Structural cost program aimed at saving 250 to 300 million run rate savings, running now just over 70 million. So to look at actually cutting a lot of cost and saving more money, which is a very big thing for them to be doing.
I was going to say here, I mean, if anyone's thinking about going back to New York anytime soon, I know you've talked about it.
Yeah.
Make sure you take the Mint service from JetBlue or just a JetBlue flight. I mean, it's a pretty cool thing they got going, and, good company. We own it in the portfolio.
You own the company.
But moving on to what we like, in the last year, the company's returned 7% of the average market cap to shareholders. And again, we talk about shareholder-friendly companies. We like those companies that are nice to us as shareholders. It's actually the second highest among airlines. I believe Southwest is number one, but Southwest is a little more expensive, so that's why we bought JetBlue. And in the transportation industry, JetBlue is very high up there in being shareholder-friendly and returning that money to shareholders. Looking at the target sell price, we can see December 2018, the estimated GAAP EPS of $1.88, which gives a target sell price of $31.02, so well again above that current price. Now, concerns about JetBlue. I talked about this a little bit, but the hurricanes were impactful in operations for Florida and Puerto Rico. Nice thing is, Florida, they're saying bookings, they expect to be back online, normal business type, actually this month, so November. Puerto Rico, however, is going to take a little longer. I mean, the hurricane really wiped some things out there. But the nice thing is, and I say the nice thing, it's a very sad situation, is a lot of the travel to Puerto Rico is friends and relatives. So they believe that will not be cut as drastically because people still need to fly out to Puerto Rico to visit those friends and family. And then also the nice thing with Puerto Rico and the company is they can change around the load capacity and go to different destinations. So they don't need to fly to Puerto Rico as much if the demand's not there. And then the final concern about JetBlue is the rising oil prices would impact profitability. It is a large expense for the company, is that jet fuel. One of the nice things, and we always tell people, if you're looking at an airline, make sure they do have some types of hedge against oil, and JetBlue uses derivatives and different types of future swaps to make sure they kind of have level cash flow, level earnings moving forward.
Next company on the list is Vishay, which is on the buy list. It's actually a hold. It's done very well the last few years. This has come from around 10, 12, all the way up to about $21.30. I think today it actually crossed 22. But we own about 395,000 shares. The market value now, because of the increase, is about $8.4 million, what we own of that company. 2017 stock price change is 32.6% to $21.30. Again, it's probably now about 35%. The company was founded in 1962, headquarters in Melbourne, Pennsylvania. Then the semiconductor industry and obviously technology. Talking about the company a little bit, revenues for the fourth quarter rose $678 million from 2016, $645 million, growing their sales very nicely. The demand from all end markets is improving. The CEO talked about the automotive and industrial, how strong that they're improving the end markets. So the economy is not slowing down. Businesses are doing very well. They're seeing good things down the road. Dr. Gerald Paul, who's the CEO, says for worldwide automotive markets, expect strong growth for years to come, driven by e-mobility and sensors. And this is one thing that people worry about, saying, oh my gosh, I see so many new cars on the road. There's no one left to buy new cars. We went through a major rebuild on cars because in 2009, about half of the cars were being bought. We're catching up on that now, but again, worldwide they're selling to, there's a big demand for cars worldwide.
And we talk again about generating cash. We don't have the numbers here for the balance sheet, but this company has a ton of cash on the balance sheet. They do generate cash from operations in the recent quarter, about $118 million. So very important that we're seeing that cash flow. We can see here at the end of Q4, Vishay had a backlog sales of 5 months with a value of $1.1 million. So what that means is if they do absolutely nothing, they have $1.1 million in sales over the next year or so. I don't have the exact numbers on when that backlog goes for, but very nice to have a strong backlog. And then also down here, the company continues experiencing growth in the most profitable businesses, resistors, and inductors. So we like seeing those profitable businesses increase because the gross margin, the profit margin increases, then your earnings per share increases, and at the end of the day, your stock price goes up because your share is more valuable, and we all like to see that stock price increase. The only concern we have here is their products are behind the scenes. Has anyone ever seen a Vishay product?
You have? Or you're in the industry?
Yes. They're tiny little diodes and tiny little, I don't know, some of their products are microscopic
diodes,
that go
yeah.
on these little, sometimes they're big oil wells even. But, you know, we don't see it on a day-to-day basis, and they are a very important spoke in the wheel. So they make all those big products run, and again, very happy to have this company in the portfolio.
Yeah, one thing I do kind of worry about too with it is that they are getting close to target sell price. I think it's around 24 is target sell price.
Yeah.
One thing we look forward to is mid-November is that we will start seeing new yearly reports or yearly earnings come January. So I'm hoping that the stock does not go above 24 for that time frame. If it does, we still might hold off a little bit because we know we'll see new numbers for then 2019 is what we'll be looking at.
Next on the list is General Motors, and I think this is one of the companies we were talking about at the beginning where, oh my gosh, why are you buying General Motors? What are you doing? Everyone hates it. Well, now General Motors is doing quite well, and again, we've collected a nice dividend, and the stock price has appreciated. You can see it is still number one on our buy list. We own about $11.2 million of it. Again, I talked about that performance. 2017 stock price change up 26%. Current stock price is $43.57. It's headquartered in Detroit, of course, and we know it's in the auto manufacturer industry.
Does anybody remember when I was talking, I think about a year or two ago, about buying General Motors? I was so excited about it, and people saying, oh my gosh, why is he buying General Motors? Anybody remember that? Yes? Okay, thank you. And people saying, oh, why is he buying General Motors? And we got about a 5.5% dividend. Yeah. Well, guess what? We bought it back then. You're still getting that nice dividend. And now again, I think the stock today is around 43, 57 is still. Let's talk about General Motors. During the Q4, the fourth quarter, GM delivered 781,056 vehicles in the United States alone. But this amazed me when I saw this. 982,311 vehicles in China. They're selling more in China than they are here in the United States. This was a record in China, up 12.3% from last year. So again, don't just think that Chevrolets and Cadillacs and so forth are just here in the United States. They are a global company. Available at Cadillac dealerships in 2018, I want you all to run out and buy one. They have the Cadillac CT6 will have Super Cruise. You'll be able to have hands-free highway driving from a Cadillac in 2018. Who's excited about that? Nobody? Couple people, right? Who's afraid of that? That's a real thing. It is coming, and I hate to say it because I love cars and so forth. The robotic cars are coming, and there's no way to stop them from coming because I don't think I'll see it, but I think someday, Chase, you won't be able to drive a car because it's going to do everything for you. So.
Not looking forward to that.
Yeah. And then in late to late August, GM was recognized for being a leader in self-driving vehicles. The stock then was around $35 a share. Again, it boosted the stock up to the low 40s at that point in time. And actually, talking about China, in China, 5 new models were launched. There's a big market in China. It's a growing market there. GM is participating very heavily in China.
I was going to say, I did a ton of reading today, and this is one of the conference calls I read. It's phenomenal what they have going. They actually do have autonomous driving in San Francisco right now. They have Cruise is the name of the company. And it's for employees right now where a car, there's no driver. It'll come and pick up the employees and take the employee wherever they want. And again, that's in San Francisco. They're also thinking about launching it in New York. But again, it's a very small beta test right now. But I mean, there are cars in San Francisco you'll see driving around, nobody in that driver's seat.
And who would be afraid to get in a car and have no one in the driver's seat? Wouldn't they wait to sit in the back seat and there's nobody in that driver's seat? It's kind of weird, isn't it? Yeah, but that's technology. Technology is always frightening when you started with it.
Yeah, but we talk about the technology. We also talk about the numbers here. $17.3 billion in cash. I mean, this is one thing we looked at when, oh my gosh, General Motors are going bankrupt. They have no money. They did go bankrupt, but that's because they didn't have $17.3 billion in cash several years ago. Now they have that strong liquidity. They have that strong business. Concerns about General Motors, they did take a $5.4 billion charge during the quarter for the sale of their Opal and, I don't know how to say that, Vauxhall division. The majority, however, was non-cash for divert assets and pensions. So they didn't just give $5.4 billion away in cash. A lot of it was due to accounting. And the other thing we're looking at here was this is a very non-profitable division of General Motors. What they did was they sold that off, took the excess cash, and now they're taking that and investing it in profitable areas that they believe will be such as the autonomous driving, that nice technology that we all like to see in the cars. So they're looking at the profitability of it and said, let's get rid of this European business and focus on the strength of our business. The other thing that we don't like here is with the large increase in the stock price, the dividend yield is now only 3.4%. Again, we started buying it, I think the highest we probably got was 5.5%, 5.6%. So we're not getting that same income as the dividend yield. It's just now 3.4%.
And actually, I think maybe in 2018, they might increase the dividend, so that may go up. But again, if you bought the stock with us back when it was like 30, 32, your yield back then it was maybe 5.5 to 6. Your yield may go up to 6, 7% or so because they keep increasing.
I was going to say 3.4% is still not a bad yield. We talk about, the bank. Anyone getting that in the bank right now? 3.4%.
And that was one thing, too, I forgot to mention about Harrison and financial planning. One other thing that he does as well is when you have cash in the account, he does kind of look around, not in our account, but if you have bank CDs and so forth, he actually looks for other places to get you higher yields. I think he said he found a bank that was, I think, yielding 1.4%.
1.35%.
1.35 or something, yeah. So that's another service that financial planning does for you, is make sure you have that liquid cash earning good rates for you as well. Alrighty, next, Intel. It's on the buy list. It's now a hold because it's come up quite a bit. We own about 246,000 shares of it. The market value at WHAM is $11,291,603. Stock price change for 2017 is plus 29%. Current stock price is 45. Again, it's one I talked about. We did stepped in, like we're going to do a Bed Bath & Beyond and Parker Drilling. We stepped in and bought it around 34, 35, I think it was. And I got complaints from people. Why are you buying more Intel? It's not going to go anywhere. It's just a PC company. Well, proved that one wrong pretty quickly. Sometimes it works faster. Sometimes it takes a little bit longer. But they were founded back in 1968. They're in Santa Clara, California. They're in the semiconductor industry, and technology is what they are. Third quarter revenues were $16.1 billion, a 6% growth year over year, so growing very nicely as Intel. Internet of Things business had revenue growth of 23%. This is something new. I say new, it's probably been around for what, a year or two, Chase? I think Internet of Things been around. So it's something new, but growing very nicely for Intel. Waymo is self-driving cars have been processed with more self-driving miles than any other autonomous fleet. And yes, they use Intel chips. So I love seeing that when they use our companies.
Talking again about self-driving, Waymo actually has a service in Phoenix where you can sign up for it. And same type of thing. There's no driver in the car, and it's a free service just to kind of get that beta testing. If you're willing to take the risk and get in a self-driving car, that thing will take you wherever you want, within a certain limit, of course. But they're out there again. You got to look out for those if you go to Phoenix. I know we have some people from Phoenix. I don't know if you've seen any of them on the road yet, but
I think it's going to cause accidents because you're driving down the road and all of a sudden you look over, see nobody in the driver's seat. You're going to say, "Oh, you're going to go excited, probably run into them." So it's going to be weird to see that for the first time. I think when you see no driver in the car going and there's nobody in the driver's seat, it's going to be a weird thing.
But I mean, we talk about that self-driving. One of the big concerns people used to have with Intel was the business outside of PCs. They used to just do PCs. Oh my gosh, Intel has nothing. Well, look at this. Outside of the PC segment, it grew 15% year over year, representing 45% of the total revenue now. That is up 30% from 5 years ago. So they're growing outside, they're doing different things, they're not just engulfed in that PC market that's declining. They're looking for other growth drivers as well. See here, year to date, the company has generated $7.2 billion in cash, has paid $3.8 billion to shareholders, and purchased $3.6 billion in stock buybacks. Again, those stock buybacks are so nice because it increases our piece of the pie. And with Thanksgiving around the corner, I can tell you I do love a bigger piece of pie than a smaller piece of pie. So we love to see those stock buybacks. I know, I feel like I've been putting on weight lately. But anyways, concerns about Intel, no concerns about this company right now. They're doing a lot of phenomenal things. Only thing I'd say is the hold, so we're not buying more of it. That's our only concern at the current time.
Apple.
Now, I got to ask, Apple, is that probably the favorite company in the portfolio right now? Everyone that holds it probably loves it. I mean, I always get calls about it.
And let me ask you a question. Who wants to sell their Bed Bath & Beyond and buy Apple? You're all very... Oh, Kevin. I was just going to say, you're all very smart. That's the wrong thing to do. That's called selling low and buying high.
But talking about Apple, I talked about it being a hold. We're not buying more of it at the current time. And we went through this in 2015. oh, we love Apple, we love Apple. Well, we didn't buy any of it. Went from 126 down to 99. That's when we got excited. That's when we started buying more. Kind of feeling a little bit the same way. The valuations are getting a little pricey, so it is a hold. It is our largest holding at $15.2 million. Stock price change, 52.3% increase. Current stock price about 173.97. It is headquartered in Cupertino, California, and we all know what Apple does, of course.
Total revenue has increased at 12%. Emerging markets revenue outside Greater China was up 40%. India revenue doubled year over year. We kind of talk about how India is growing as well on top of China. Greater China was up 12%. Service revenue reached an all-time quarterly record and had annual revenue of $30 billion. I mean, that's just amazing when you have that type of annual revenue coming in from just service, not from everything, but just from the service. The number of paid subscriptions reached 210 million, up 25 million over the last 90 days. So it's not just selling the phones. People think, oh, they're just selling these phones. No, they have other businesses as well. The watches, the iCloud, the music. These are all paid subscriptions. That's as an ongoing basis of revenue coming in, not just selling these phones here. Wearables business was up 75% year over year and generated the annual revenue of a Fortune 400 company. That's just one division for Apple there.
I mean, it's phenomenal. We talk about the service revenue too. I mean, the service revenue load is the size of a Fortune 100 company. So we have Apple, which is the biggest market cap company in the country in New York Stock Exchange. We have the service business, which is the size of a Fortune 100 company, and the wearables business, which is the size of a Fortune 400 company. So they have a lot of great products, a lot of diversification, and we talk about the cloud being such an exciting thing. I mean, it's a pretty phenomenal thing as well, because what they did is they get these subscriptions. We all know we love to take pictures, especially the younger generation. I know they take pictures all the time. I don't really take that many pictures, but anyways, what happens is you take more pictures, you got to store it, and it goes in the cloud. Well, guess what? You need more cloud storage, costs you more. So, I mean, it's a very brilliant business model, and it's a reoccurring revenue for the company, so we love to see that.
Well, Chase, because you keep, on your dates, you keep taking the 10 Qs and 10 Ks and try to share them with the dates, you don't get any dates anymore. So
I know,
that's
why
why I
don't take pictures, you know? But we talk about, again, generating that profit. Company has a phenomenal amount of cash on the balance sheet. $268.9 billion of cash on the balance sheet. I mean, it continues to rise. I mean, that they could buy probably almost every company in our portfolio with $268 billion in cash. So it's just a phenomenal amount of cash. New model orders have been off to a strong start with the 8 Plus off to the fastest start of any Plus model. And I think this is very interesting because I feel like, at least when I talk to people, they're like, oh, the iPhone is the same thing, you know, and I mean, it's probably very similar, but people, they still go out and buy it. The 8 Plus, again, is off to the fastest start of any other iPhone in the history. So very, very excited about that. And also the iPhone X has been off to a very strong start as well. And I just put this on here because I thought this was very cool. They're very excited about the future of augmented reality. Does anyone know what that is? It's pretty cool. What it does, it kind of encompasses virtual reality in real life. So if you're like holding your phone, and I see all of you guys, there's also a virtual reality aspect of it. So as an example, if you go to a sporting event and you hold your phone up, say you're at a football game, and the running back, you can see the running back pop up and you can see his stats for the game. So I mean, the technology of augmented reality, they're very, very excited about, and that's because of the software behind Apple's products.
pretty exciting, huh?
Concerns about Apple, we do have some. Debt has increased $51 billion over the last 2 years. Reason their debt's increasing is, of that $268.9 billion in cash, 94% is outside of the United States. Now, we all talk about, we know there's potential for tax reform. If we do see a lowering in the corporate tax rate, we could see some of that cash come back and some of that debt be paid off. And the reason they did that instead of bringing the money back, they said, we're not going to pay 20-25% in taxes. We'd rather borrow at 3.5% as an interest rate. So it was a financial decision they made. And the reason they were able to do that is because they had a very strong balance sheet. Even with the amount they've borrowed, they still have debt to equity of 86.3%. A little bit higher than we'd like to see, but nothing that is disastrous or really that concerning. And then, of course, the target sell price of $197.01 is just 12% away from the current price. So we are getting close to that target sell price, and their fiscal year just ended, so this is new numbers. I don't want to say it, but I feel like we might lose Apple here maybe next year.
You just had some people pass out with that. And again, yeah, unfortunately, Apple's on a fiscal year, so come December, January, there's going to be no increase in their future target price because that happened in June, July is when it actually happened. So
I think we might get some Hulk faces if we take the Apple and buy some Bed Bath & Beyond with it.
yeah, what a great idea, right? Uh-oh.
I'm going to be running, yeah.
Let's go to the next company. All right, let's talk about Valero Energy. It's on the buy list. It is number 10. Number of shares owned, 181,833. The market value now is 14,668,000. 2017 price change is 18.5%. Current price around $80.67. We did start buying this company back about 6-7 years ago, around $16 a share. It's one I love because it keeps raising the estimates. The earnings keep going up. Stock goes up. We've not had to sell this company yet. Hope the same thing does happen with Apple, but again, if it hits that target price, we will sell. They were founded back in 1980. They're based in San Antonio, Texas. In the industry of oil and gas. Stock has hit an all-time high of $82.19, announced expansion of product supply chain into Mexico and Texas. This company keeps growing and growing. Now they're expecting the Diamond Pipeline, which is 440 miles, 20 inches large, 20 inches round, pipe from Oklahoma, Tennessee, transporting up to 200,000 barrels a day to be completed in December. When I saw that, that's a lot, 200,000 barrels a day going through this pipeline. It's amazing what we do, 440 miles of pipeline that they put together. The third quarter net income was $841 million, $1.91 per share, a substantial increase from the Q3 of 2016 of $613 million or $1.33 per share there.
What else do we like about this company? It's a very efficient company, very well run. We all know about the hurricanes that hit this country. It took a direct hit from a Category 4 hurricane. This company is very prevalent in Texas, and the supply disruption lasted only a few days. So they're able to kind of weather that storm and get things going very, very quickly to supply that gasoline and again, generate that revenue and earnings. This is kind of a positive and a negative. Because the company has done so well, based on recent numbers, the stock price would have to fall under $75 per share to be bought in portfolios. So again, we're very disciplined. We talk about that disciplined selling strategy. We also have a disciplined buying strategy. We wouldn't buy it unless it fell under those $75 per share. Concerns about Valero, kind of similar to JetBlue. Only concern we have about this company is the effect of rising oil prices. Now what happens with Valero is they make money based off of the spread between gasoline and oil. So if oil goes up and gasoline doesn't rise as fast, that spread shrinks and the company becomes less profitable. So we want to make sure that we're kind of cautious with this company and, looking out over the next few years.
That's right. Always cautious, always watching those companies. Speaking of watching companies, let's talk about one of your favorite companies.
I know, I always love talking about this company. Michael Kors. Last time I talked about Michael Kors, I talked about the customization of purses. You can go online and make your own purse with different colors and different models. I was going to ask, did anyone get excited and go do that after?
Oh, no.
Oh, no one's excited? I made my own and I bought one.
You know what, Chase? Chase needs a girlfriend so we can buy some Michael Kors purses, what we need. Right?
I was going to say, Christmas time's coming up, so it's a great present for nieces, daughters, wives, girlfriends, whatever it may be. So be sure you check out Michael Kors. But back to the numbers here. It is number 11 on our buy list. Market value at Wilsey Asset Management, $9 million. 2017 stock price change up nearly 26%. Current stock price $54.09. It was founded in 1981 and does have a headquarters in New York City, New York. It is in the textile industry in the consumer goods sector.
Purchase of Jimmy Choo, which is another retailer they bought. It's a high-end retailer, and they stepped in and actually bought that. Why? Because potential for an additional $1 billion of revenue and platform for future acquisitions. So this, again, is a company that's growing, doing what they're doing with the purses, the watches, and everything else on the retail side. Revenue increased 5.4% year over year. Europe, and I remember people saying, oh, but Europe's so terrible and so forth. Europe revenue was up 9.2%. Asia up 30.4%. So Michael Kors products are really on fire and they're growing very nicely. We like seeing that. Regarding Amazon future, this was in the conference call. He said too early to ascertain, but certainly focus on our own digital communications with the consumer. So they know Amazon's out there, but they're trying to get people to go through their sites and so forth. That's where they want to kind of grow the business, but they'll still deal with Amazon. Profit margin, love seeing this, 12.7% versus the industry at 4.3%. What that means for every dollar they bring in, they keep almost 13 cents, while the industry only keeps 4 cents. So a very big profit margin there.
And the reason that Amazon thing is so important to distinguish is because Michael Kors is not a store. Well, they do have stores, but it's a brand, it's a lifestyle is what they like to say. So, I mean, if they didn't have their products on Amazon, let's say, people would still seek out Michael Kors because it is a unique brand. And also, I did want to talk about Europe. We talked about this, I think, when we first bought the company. There's about 25% of their sales does come from Europe. So we are excited to see that growth and think Europe will continue to grow as well. So one reason we had it in the portfolio was because of the diversification in Europe. Next thing we love, talk about this every time, no debt on the balance sheet and a current ratio of 2.8. One reason they're able to kind of extend that platform and acquire other companies like Jimmy Choo is because they have that strong balance sheet where they can go out and buy other companies and generate more sales. Concerns about Michael Kors, surprised I do have concerns, right? I mean, it is my favorite company. But there is an expected decline in sales. Reason being is they are getting less promotional. They're trying to drive higher margins on their products and say we're not just going to give our products away and be promotional and do discounts. No, we have a very good brand, a very good product, and people are willing to pay up for it. So what happened was in Q3, there was a 66% reduction in the amount of promotional days. And even in the holiday quarter, they said they're going to be even less promotional to drive those higher margin products. So far, it's worked out very well for them. If you would have noticed, they had a very nice increase the day after they reported earnings because this strategy has been working so far. And the other thing, smaller bags and smaller wallets continue to affect AUR or average unit retail. What that means is what's hot right now is the crossbody. It goes across your body, a little purse over here. That is the crossbody, smaller type of purse, not as profitable as those big purses. So that's kind of been driving down margin a little bit, but if they can change that promotional activity, we will see margins increase again.
I think what it does too is that you get in there, you buy those small purses and so forth, you like it, you go back in, you start buying bigger purses, that gets that traffic going through Michael Kors. All right, next we have the buy and hold list. And again, if you're guests here, we tell people, full disclosure, do not go out and buy these today because these will change on Monday as well, because every Monday we do our numbers and so forth, just to show our clients what the list actually looks like that we put together. Again, on top you see General Motors is our number 1 buy. Number 2 on the list, don't get all excited, Parker Drilling is number 2 on the list with a target sell price of $2.19. Okay, so that's number 2 on our list. Bed Bath & Beyond is number 4. And you'll see the list down here. And then we get down below 13% behind Allstate. Apple, Intel, Nucor, Precision Drilling, and Vishay are all on the hold list. So that is what we hold currently, or what we're buying on the portfolio. And I believe that ends it. So that does open it up for questions. Any questions? We all are smarter than we first came. We all happy with all the companies?
How are they going to make money with the hurricanes and man-made disaster with fire? It's not going to affect them adversely?
Great question. The question is with Allstate, with the hurricanes and the fires, how are they going to keep making money? It's kind of funny. We had many buys on the order, the buy list for Allstate. And when the hurricanes came along, because Allstate was trading about $90, $91 a share, when the hurricanes first initiated, the stock went down to about 85, 86, and we had quite a few orders trigger, and we've been waiting for 3, 4, 5, maybe 6 months to buy Allstate. So when that happened, it went down, but they're set up very well for that. They're reinsured. They have quite a bit of cash on the balance sheet and stuff, so they are set up for that. And they weren't as bad because Allstate was not in Florida, where they're not much in the south. So they did not have much exposure to the hurricanes. They got smart the last time, kind of pulled out.
Wildfire in California.
I've not read anything about Allstate and the wildfires. Have you seen anything on that, Chase?
I haven't seen anything on that either, but I was going to say as well, the interesting thing that happened with the hurricane is a lot of the damage came from flooding. And flood insurance is actually a different type of insurance than homeowners insurance. So they actually didn't really have to reimburse a lot of those flooded homes because I believe it's a government-run program as flood insurance.
Yeah, the
So
government had to
they
pick up
kind
the
of
big tab.
didn't have to be on the hook for that, so that helps their profitability, and I'm not sure about the wildfires at the current time.
Yeah. Rose.
I feel like a teacher.
Do we anticipate any more sales this year? We've got to tell you, this is when new potential clients come in, we tell them, this is such a heavy transaction year for us. We've done 5 trades this year. It's been phenomenal. It's like, wow, we're so tired doing all these trades. We joke about that because we see other people come in and their broker does 5 trades a week. So the question is, do we have any more sales coming this year? I don't believe so. I mean, the closest one was probably
Apple and Vishay, but
Apple
I mean,
and Vishay.
if it went up 20% in the next month, that would that'd be pretty phenomenal, I guess.
To answer your question, I don't think so. I'd be very surprised if we did. But again, if something crazy happens, we would. But I don't think so. I know that's. What's that? Well, that's the question. The answer is I don't believe so. But again, that's why every Monday we do the numbers. We look at it. One reason that we might have like a Vishay, because I think they're a calendar year, is it may cross the target sell price a little bit. We may not sell it because we know just in a few weeks we're going to get 2019 numbers, which should be higher. So sometimes you might be a little bit patient on that. So I just don't see us selling anything this year. Not to say we wouldn't if something drastic happened, but I don't think so.
Yeah, don't hold us accountable, but the odds are we probably won't.
Right. Yes.
What can you tell us about Nucor? You bought it recently, and I see it's on the hold list.
Nucor is one that we just talked about it last time. We did quite a bit of buy on it. We're very excited about it, but their earnings estimates going forward actually came down, so it went from a buy to a hold. We do believe, again, with January numbers coming out, we'll probably see that go back on the buy list. We also do believe going forward, as we talked about this last quarter, a lot of infrastructure rebuild be done with steel, a lot of good things going on in that area.
Yeah, I mean, that's why we bought it. And again, the numbers, we were excited when it came across that 30% margin of safety we look at because we've wanted a good steel company and the numbers look good when we pulled it. And most of the time we won't buy a company if it's that close to the 30% margin of safety, but we were so excited with the steel company, we decided to buy, and that's why it went from buy to hold pretty quickly.
Yeah, it's about 26% away from the target sell price. So it's right in there, and anything could move it to actually have it be a buy again. So, any other questions? This is a quiet group.
I was going to say, most of the time we get at least 3 or 4.
I know. Yes.
Gilead Sciences had gone a nice run up to mid-80s or something, and it's pulled back quite a bit. Can you tell what's going on there?
Yeah, Gilead Sciences had a nice run up to mid-80s, actually a little bit above that, by the way. Then it's pulled back. What happened with them? I think they're getting a bad deal. I mean, they're making a lot of money. The focus has been on their drug.
Well, the focus has been on hepatitis C, and what has happened is the whole kind of sole focus of a lot of people has been on hepatitis C, and hepatitis C has been very hard to predict because of the amount of patient starts. So what's happened is a lot of people said, oh my gosh, hepatitis C, it's going away, it's going to be not part of the business anymore. But again, they're looking at the future saying HIV, we talked about it's called CAR-T is the oncology drug that they're really kind of starting to use that technology, but the concern has been the hepatitis C. And one thing we forgot to mention on the hepatitis C front is they are launching in China this year, I believe, but they're starting with a very slow launch, and there's about 10 million people affected with hepatitis C in China, so it could be a very lucrative market, not next year, but potentially 2, 3, 4 years for them.
Yeah, I mean, the numbers on Gilead look very, very good. It is what, who's on our buy list here? Yeah, number 9 on the buy list. I mean, we like it quite a bit, but it's just kind of, sometimes the hype went there and the hype went away, and now it's just a true investment is what it is. But they're doing some great things. They hired a research guy that was from
Novartis, the oncology guy.
So I mean, they got some great things going on for the future. Yes?
Is on Apple, Qualcomm, Squabble?
Yes. Well, the Apple Qualcomm squabble. Well, I was talking a little bit about that on Channel 8. I was on CNBC about that as well. We think that, I mean, Apple, I don't know how to say it. I think Qualcomm's in trouble because I think Apple wants to change things. And we've talked about, too, that if Apple wins that, then what's going to happen is that other companies are going to say, well, gee, Apple won, so we're going to sue Qualcomm as well. So
I mean, kind of the argument has been that Apple says, well, our phone is, $1,000 now, but it's the same chip that you use in this one versus our $600 phone, but you charge based off the percentage of the phone, but it's the same technology. So that's not fair. So that's kind of what they took them back to court for. And the problem is if Apple wins, all the other phone manufacturers are going to come in and say, hey, wait, they got a better deal. And then Qualcomm could have some serious problems, I think. But we'll see what happens.
Yeah, and if you saw the segment I did on Channel 8, I actually talked about, I don't know why Broadcom's buying or looking at buying. I mean, I know why, but I don't think it makes any sense. I think sometimes when we get in these markets, these high markets, I think many times CEOs, their egos get pretty inflated. Actually, we just saw GE fall from 30 down to 18. Now the CEO, Jeffrey Immelt, they're kind of picking on him, the ex-CEO, about how he overpaid for maybe too many things and sold and bought at the wrong time. I think it's a bad move for Broadcom, Qualcomm, and then Apple. I think it would benefit Apple as well.
Yeah. I mean, I still think Qualcomm will be around, of course. It'll still be a
Yeah.
good company, but I just don't know. The water's kind of murky with their licensing department,
Yeah.
and we'll see. I mean, there's
It's not
a lot
worth
that
it.
can happen.
It's not worth what it's trading at right now.
Yeah.
So, yes,
There are no pharmaceutical companies you're happy with at this point?
Gilead. Yeah, yeah. Actually, we looked at other ones. We looked at Merck. We looked at Pfizer and so forth. And they're kind of,
Biogen.
what's that?
Biogen was one we looked at pretty
Yeah,
seriously. but
Biogen
then
was
it
one we
went
looked
way
at.
back
Yeah.
up.
So there's a lot of things out there that are kind of pricey, and we want to get those good deals, or those great deals, and we keep searching. We thought Nucor was a good deal. Goodyear Tire recently, but there's not a lot of great deals out there. Again, we won't pay 15, 16, 20 times earnings for these companies because we know that could be a problem down the road.
You were at some restaurants for a while too.
Yes, we're looking at restaurants. We looked at.
We look at a lot of different things throughout
Yeah.
the year. I mean, look at restaurants. We looked at, gosh, what was the other? There's another one we got pretty excited about too. We looked at different types of financial companies,
Yes.
different banks. A lot of different things have been on our radar, but nothing has really excited us as much as what we have.
We had so much fun in the office looking at all these companies. You should come by sometime, just see the fun that we have looking at all these different companies, reading all these numbers. I mean, we should put the numbers up big so people can see them because we love looking at these companies. Any other questions? Yes.
Do you think GE has any chance of turning around?
Question is, do we think GE has any chance of turning things around? Yes, we do, but we just wrote a newsletter on that, which is on our website now. I don't think GE, we wouldn't be interested in GE until it got down about $13, $14 a share. I think it's be dead money for probably at least 2-3 years. The CEO stepped in, this new one, John Flannery, I think his name is, and he's doing, I think, a really tough job to really shake up the company, but it was long overdue. But I would not be buying GE at these levels now. I think you'd have dead money for probably at least 2 or 3 years. And again, the dividend's now cut in half. So I think you get like a 2% dividend now.
Yeah, I'm not sure, but I was going to say the biggest thing that scares me about GE is he's selling off a lot of the businesses. I mean, the business got so complicated that now he's going down to 3 businesses, or 3 different types of business. So you really have to take a look and say, how profitable are those businesses? It would take a ton of research to really understand what's going on with GE, and the numbers just don't really warrant that amount of research at the current time.
Tax reform will positive.
If tax reform goes through, would that affect our stocks? Yes. I mean, I think a lot of that's built in already. So, I mean, if it were not to go through, we'd probably see a little pullback, but nothing major, because again, we're not paying for the high price of the companies. But I think tax reform, when it goes through, I think it will go through, will be beneficial for businesses, owners, large and small. And for our business owners, I talked to some of you out there as well. All right, I want to thank you all for coming. You got your hats out there if you want to, get the hats. I think you can also sign up for the Bed Bath & Beyond, one more for their catalogs. Thank you all for coming. We hope to see you at the holiday hello that we're going to have in December. I'm not sure the dates. Any questions you have, stay around. We'll answer your questions, but thank you all for coming.